Welcome everyone to today's virtual home buying seminar. My name is Dan Sugg and I am the Chief Mortgage Lending Officer. Is there any advance the slide for me, please? I just want to remind everyone that we are recording the call today. And if you would please use the chat box for any questions. So if you have questions, go ahead and type them in there, and Zareen will be managing the chat box for us. And I also will be trying to interject when we can in those questions. Rest assured, though, if we don't get to your question, we will have somebody follow up with you today directly for that. So again, my name is Dan Sugg. I'm the Chief Mortgage Lending Officer here at Michigan First Credit Union. And my responsibilities here is Michigan First Mortgage. So everything you see that relates to mortgage rolls up to me. I am going to have the honor of leading a discussion today around our MSHDA loans and our participation with MSHDA and everything, hopefully, that we can fit into the half hour that you need to know about that. So we'll spend 15 to 20 minutes talking about MSHDA loans, and then we're going to close with some tips and tricks from our experts today, and hopefully get to all those questions and answers. So Zareen, if we could jump right into the introductions. I'd first like to introduce you to one of our finest loan officers, Matt Corvu. Matt, tell us a little bit about you and what you bring to our members for not only MSHDA, but the entire mortgage experience.
Yeah, sure, Dan. Morning, everyone. My name is Matthew Corvo. As the screen notes, I've been in the mortgage business for 20 years. It's a long time in the mortgage business. It's seen ups, downs, and all around. So I'm well versed in helping people get qualified, knowing individual situations, working with people from beginning to end, FHA, conventional, the MSHDA loan, grant loans. A favorite phrase I use is if it's not now, it's when. Speak to a lot of people who they're not ready now, credit wise, income wise. So everybody can get a home loan. It's just maybe if it's not now, it's when. And I'll work with people, whether it's takes 6 months, a year, 2 years, 3 years. I have clients that
I'm not in it for that.
over the years that's taken years to get a qualified, and it's an incredibly rewarding experience. And really, when I'm not at work, which is rarely, I'm spending time with my family and coaching.
I know you're into baseball quite a bit, right, Matt?
Baseball and hockey. So if you want to talk about a mortgage or baseball or hockey or any other sports, we can have that talk too.
Awesome. Well, thanks for joining today, and we do appreciate you bringing your expertise. I'll switch over to Darren. Darren has joined us at least once a year, if not twice a year, on these calls. So we appreciate you coming back, Darren. And tell us a little bit of we're going to hear about MSHDA in the call, but about yourself and what you bring to our membership.
Well, I've been in the mortgage business it's getting closer to 25 years now in a variety of roles. The last 8 of which I've spent at MSHDA, and we've had the opportunity to work on different programs and partnerships throughout the communities to try to increase the utilization and the awareness of these programs to help people get into homes and help that transition be a little bit easier. So those situations, like Matt said, if not now, then when, we try to make that when a little bit closer. So that's a little bit about me.
I should definitely feel old. You both said in the 20s, you've been in a long time. I've been in it pushing 30, and I feel like I'm a little bit older than you guys. So maybe I just look younger. All right, well, let's jump into why we're here today. Certainly. MSHDA certainly is a great product. It is a great association that we have at the credit union, Darren, but I want to dig a little bit deeper. And we talked about this previously, is who is MSHDA and what is the mission of MSHDA?
Well, that's a great question. A lot of people aren't aware that MSHDA actually is a state agency. And since 1966, we've been involved in all things housing throughout the state. So you can see MSHDA associated with a lot of different projects and in a lot of different ways. But an excerpt from our mission statement will tell you that our focus is through public and private partnerships to create and preserve decent, affordable housing. And as a member of the home ownership division, that's what I'm doing right now, is this partnership with Michigan First Mortgage to bring our products to consumers through you and your organization. And that's a little bit how we interface with borrowers today.
Yeah, and MSHDA stands for Michigan State Housing Development Authority, and there are several divisions of MSHDA. Some help with homelessness, some help with home ownership, and then some help for those that are already in homes that receive help. So, and I know that there is both state and federal funding that you guys use, right?
Correct. Depending on which division you're working with and what program, that can come from a variety of funding sources.
Yeah, all right. Well, and if you don't mind, I'm going to stay with you. And that was a bonus question. So what is the MSHDA DPA loan program? So how does that benefit our members?
Well, the down payment assistance program is a product that is out there to help borrowers close the gap in funding that they would normally have to provide in a mortgage transaction. So normally in a purchase transaction, a borrower would be required to bring in the down payment, fund their closing costs, and their prepaids to establish their escrows for their taxes and insurance. Our program helps close that gap. So in many cases, borrowers can get into a home for as little as 1% of their purchase price.
Yeah, certainly very resonant, I think, with today's first-time home buyer is MSHDA and how it works for me. So Matt, if you can help me a little bit, and I'm a member, what's the first step to qualifying for a MSHDA loan in your expertise?
Yeah, absolutely. It's a great question. So it all starts with a conversation. Call me or your another loan officer here at Michigan First, and really just start to have that conversation. The who, the what, the why. Your loan officer is going to walk you through the process, ask you the questions. Do you qualify? MSHDA has income qualifications that you have to attain. There's credit qualifications, debt ratio qualifications. So your loan officer is going to walk you down that path, ask the right questions. But it all begins with a phone call, calling into Michigan First, talking to the loan officers and asking the questions. How do I get approved for MSHDA? And we're gonna lead you and ask those questions.
Yeah, really way before you start, physically looking for homes. I think most people today are pretty interactive on the internet and going out and searching see what's for sale. But before you really start acting on those, you have to get, especially in a first-time homebuyer scenario, you have to get to that loan, your financial institution or to your loan officer and understand what it is needed prior to even making the application. Our first step isn't to just pull somebody's credit. Our first step is to ask all those questions. And I already saw one in the chat box today about, when somebody comes to us and they've had short income or short job time, how does that work? How do we get them through there? And if you meet early with a loan officer in your home ownership search, certainly you can get those question answers and maybe address some of those gaps you may have prior to even applying, correct?
Yeah. Mortgage businesses can be tricky, and I try to simplify things. And one of the other terms I say, it's like painting a room. There's a lot of prep work that goes into it before you start painting. So that's how I look at a mortgage. Asking the questions, getting everything in order, not just looking for a house.
Yeah. I know, Darren, you touched a little bit about what the benefits of the DPA loan was, but what's the benefits of a MSHDA loan? Like the whole program, what is the main benefit?
So our objective is to put people into a program that's going to give them the best opportunity to be successful homeowners. And a couple of the resources that we leverage to do that is we provide today below market interest rates for those that qualify for our first mortgage rate. So you get a discounted first mortgage rate because of the relationships and the partnerships that we have and our status as a state agency. We also have the opportunity to offer discounted private mortgage insurance if you're using a conventional mortgage. That, along with the terms of the second mortgage, which are 0%, you don't make a payment on that, so it doesn't add to your overall housing debt per month. It is a loan, it does have to be repaid, but it doesn't add to your overall monthly burden. So those are just some of the benefits that we like to point out, that is that when you're looking at MSHDA, in many cases, it's going to be your most affordable way home.
Yeah, and Matt, so I know we talked about starting the process, but how is it different from just getting a straight mortgage, like a conventional mortgage? I just heard Darren mention conventional versus FHA. Can I do both with MSHDA? How does that work?
Yeah, absolutely. Absolutely. You can pair MSHDA, and we say pair MSHDA because the MSHDA loan is the grant with the conventional or MSHDA loan, or excuse me, the FHA. But conventional and FHA alike have different qualifications, as with the MSHDA. So we're gonna again start that conversation, see what loan we feel is best for you. Not what box, because we don't want to say that. What do we want to pair MSHDA with? Conventional, FHA. You would have to ask Darren, but I think most MSHDAs are paired with FHA. It's a little more lenient, but then we also have to meet some MSHDA qualifications. So again, it's calling your loan officer, talking to them, asking them, hey, what loan do I qualify for? And we're going to run you through again those questions, ask you, where we should start, what product with MSHDA we should look at.
So let me restate that maybe a little bit differently. So if you talk to the member and during that interview process, you learn certain characteristics about their situation, one might match better with a government FHA loan versus a Fannie Freddie loan, and then pair that up eventually with the MSHDA file.
Absolutely. That's exactly what we're looking to do, is see what best suits our members, what loan product paired with the MSHDA.
So from what I understand, FHA versus conventional sometimes you can treat the history a little bit differently, or you can treat maybe the student loan debt a little bit differently.
Absolutely.
Program fits better. So
absolutely, there's qualifications inside each loan that, again, through our interview process, we're gonna tailor to our members that we feel suits them best.
Yeah. So Darren, if we go a little bit deeper into MSHDA, what are the DPA options, the two of them, and the differences between the two? And I remember, I've been around a while now, but I remember Step Up. We used to have three, but now we have two options. So what is the differences for us?
Well, we have two options today. One of them is our older version, which is the My DPA loan, which is a $7,500 option, which is an up to version. So after your member makes their first 1% investment, 1% of the purchase price investment, we will lend them up to the next $7,500 for the rest of the down payment, the closing costs, and the prepaids. So in many cases, that second loan or that second mortgage is not much more than $6,000, because that's what it takes to zero them out, or get them all the cash they need to close. Our second, or our newest down payment assistance program, is the 10K program. It very similar. You still have to have that 1% investment, and then the down payment assistance is for the rest of the down payment, the closing costs, and prepaid. But anything that's left over can be used to bring down that first mortgage amount, ideally giving the member a lower first mortgage payment. And the 10K program is only available in 236 zip codes across the state, where the $7,000 or the $7,500 program is available all across the state, in every zip code, every community. We're very fortunate in Southeast Michigan that a majority of the zip codes that are available are in Oakland, Macomb, and Wayne counties. So there are a lot of opportunities to utilize that 10K right here.
Yeah, and there's no difference between the two in the underwriting. It really is just where the property is located, correct?
Correct. Qualifying, as long as there's no difference in qualifying other than the location, the actual zip codes themselves.
Yeah, so and all that information is available on your website, correct? So they can go out and look to see what those zip codes are.
They can. I encourage people to contact one of your loan officers, who will walk you through the options of where to find that and where to find the most updated versions of that information. But yeah, of course, all this program information is public.
Right. All right, Matt. So back to you. In my mind, when I say MSHDA or FHA, I think, especially in this forum, you think first time home buyer. If I currently own a home, can I still use MSHDA for a new purchase?
Absolutely. There are certain zip codes. Again, a lot of the qualifications from I'll answer the questions, but for income and the grant are in zip codes, and they're also broken a little further into targeted or non-targeted areas. So there are certain areas, even if you do have a loan, you can utilize MSHDA in a targeted area for a new purchase.
Okay,
So
even if I own a home,
even if you own a home, that
Yeah.
that you are allowed in certain targeted areas. And again, you're going to want to call your loan officer, start that conversation, and then tell them when you're looking. And we have our tools that will just plug it in and say, yep, that's absolutely, or no, sorry, that's not in this zip code.
yeah. Again, another reminder that the earlier to start this in your search as possible. Really, maybe the first call you should make is to your lender if you're thinking first time homebuyer or MSHDA program, to understand what the limitations on that are. There aren't many, but certainly there are some. So Matt, if we could stay with you and talk a little bit more about the qualification piece of MSHDA. Is there some income limits I need to be aware of, and what income counts in that?
Yeah. So that's a great question, and probably the biggest one we get, and we're going to ask verbally as we start. And again, it's zip code driven or area driven, but you'd be surprised. There are areas in the state that will go up to $164,000 in total income for in the household. So that's a really important question too. Or it's going to be household income. That would include any adult that intends to live in the house. We do have to include that in the total the total household income. There are some exceptions, and I'll take a quick note here because I don't use this too often, but some exceptions, and again, this is a guarantee, would be full-time students and disabled adults in the house. But if you're married and you're applying for a MSHDA loan, you both have to qualify for the MSHDA loan.
Yeah, and Darren, maybe you could touch a little bit more on that income piece, because it is different than I think conventional underwriting sometimes around what income you do use. And if you had an adult child living at home working full time, that's considered household income, correct?
That's correct. We're gonna consider any adult in the household, unless they're a full-time student or somebody that has a disability that would disqualify them from entering into a financial agreement. We would consider all of their income household income and put that into their overall household income that we're going to check against our income limits.
Yeah. And I do want to, there is a question in the chat box that I want to bring up. We use a lot of acronyms in this business. So we should probably have a call just on acronyms, but we mentioned CLTV, that's combined loan to value. So all loans or all lending on the property come in relationship to its value, versus LTV, which is just the loan to value, the first loan that you have. So just want to answer that in the chat box as we continue to go along here. All right, back to you, Matt, real quick. So this income thing, I want to make sure we stay on it. So if I'm separated from my partner, legally separated from my partner, does my separated partner need to be on the loan? How does that work?
Yeah, I just saw that pop up in the chat box. So great timing. Yeah, in the state of Michigan, now I'm an attorney. I'm not an attorney, to make that note, but if in the state of Michigan, if you are married, but your married spouse is not living with you, you're still married in terms of the loan. They would still have to qualify. Now, if you say I'm separated, in the state of Michigan, there really is no legal separation. You have to file a separate maintenance. You would have to be legally separated through a separate maintenance that is filed through the courts. Other than if you don't have that, they have to qualify for the loan. So married, but they don't live with me, it's still married.
So when you mean qualify, not so much from a credit perspective, but using that income toward seeing whether you're on the loan or not. Or
Well, they would need to be on the income portion. You have to income qualify for that loan. And Darren, correct me if I'm wrong, they have to credit qualify too, correct?
That's correct. From our perspective, anybody that's married is going to need a full participation from their spouse to qualify for this specific product.
Okay, great. All right, so what, I heard, Darren, this is for you. I heard Matt talk about targeted and non-targeted. What can you elaborate on that for us too?
So we do have specific municipalities inside of the counties, and in some counties are entirely targeted. But I'm going to use Oakland County as an example because that's kind of the center of where we're at for this program. Because Oakland County has both targeted and non-targeted areas, in the non-targeted portion of Oakland County, you would be required to be a first-time home buyer to participate in this program. And the income limits are a little bit different depending on the size of your household. If you're in a targeted area, as an example, in Oakland County, Pontiac, the city of Pontiac, the city of Southfield, Royal Oak Township, we waive that first-time home buyer requirement, and the income limits go up in depending on your household size to north of $125,000. So what that designation does is tell you what your home buyer status has to be, whether it's first time or repeat, and what your income limits are going to be to qualify. And again, you can get all of that information from one of your loan officers.
Yeah. And does targeted and non-targeted areas change, or if they do visit very often, how does that work?
They do change. I mean, there's the potential for change. We haven't changed our targeted or non-targeted areas in 10 years. So they've been pretty static as of late.
Great. Okay. So Matt, if you're using DPA, down payment assistance, can I also get a gift?
You absolutely can. Yeah, you absolutely can get a gift with the down payment assistance or the down payment loan. I prefer to call it the loan because as Darren said, while it's 0% and it does not have a payment. If you ever sell refinance or transfer, that does have to be repaid, but 100% you can still receive a gift.
Yeah, and we never like to say free money. It is the free use of money.
Free use of money. It's a great tool.
While you're using it, you definitely, if you sell the house, generally what happens is somebody sells it and you recast it.
A super powerful tool, but it is, it's not free money.
Yeah, so there would be a lien out there that would have to be satisfied at some point. Should be see a change. And then let's talk a little bit about appraisal guarantees, Darren. I know you had that on your list. Tell me, what does that mean, appraisal guarantees?
So MSHDA leveraging the down payment assistance program does give you the opportunity to make a stronger offer, because we know right now the markets are extremely competitive and there's scenarios where you have to offer over the purchase price or over the appraised value to secure the purchase contract on a home. You can absolutely do that with MSHDA. You can do that with the down payment assistance program. And a lot of times what that does, it'll give you the opportunity to use the cash that you have in the bank to make a stronger offer, knowing that you have the opportunity to leverage the down payment assistance for the rest of the down payment, the closing cost, and the prepaids. So it's really the opportunity to make a stronger offer and to get that home that you're looking for with the tools that we have provided to your lending partners here.
Awesome. And then just a quick follow-up, man, on child support or my child, how does that work with these? Do you use that to count against the qualification income, or do I get to use my child support income?
Yeah, you 100% can use your child support income. Again, with everything in the loan process, it does have to meet certain qualifications, has to have a continuation period of 3 years. But yeah, you can 100% use your child support income, which again goes into your income qualification number.
And there's no separate appraisal for MSHDA. You use a standard appraisal that we do during our process, depending
Yeah,
on.
100%, 100%. It's all ordered through what we call an appraisal management company. So the process is really, I tell the members that the process, they don't really see the difference in terms of us obtaining the MSHDA. You're going through the loan process and we're congruently filing and handling the paperwork with MSHDA.
And just real quick, Matt, what is the minimum credit score for getting a MSHDA loan?
Right now, MSHDA is a 640.
So that the mid score of the three that we
Yeah,
get.
mid score of the three is a 640.
Listen, guys, I appreciate your time. We could talk about this all afternoon, and we do have a ton of questions that we didn't get to yet in the chat box. So, Zareen, if we could jump to our slides, so we make sure we get the tips and tricks in there before the end of the call, that would be great. And we'll start with Matt. Matthew, on the mortgage side, tell us the three things you would love our members to take away from today. And rest assured, everyone on the call, we're here in a second, we're going to have contact information, and all of this is recorded and on the web. So Matt, what are the three things they should take away today?
Well, the number one is, get prepared, have that initial conversation, call your loan officer, get ready before you're looking for that property, get that pre-approval letter, make a strong pre-approval letter. I would say, so you can shop with confidence. Don't let that be second to shopping. And again, with your talk to your loan officer, have a conversation, tell them everything, tell them what you're trying to do, what's your goals, your questions, concerns. Don't let something pop up a month into the process that you didn't think was a big deal, but it could potentially impact the loan. So talk to your loan officer, make a plan, get everything in order, and so again, you can get out and shop with confidence.
Yeah, and again, just as soon as in the process, there's no, you can't be too early in that process of meeting a lender. You don't start, like I said, by pulling a credit. You start by having a conversation about needs and what really fits your situation. And there was a question that I want to address real quick in the chat box, as I had a chance to read them there, that MSHDA is, again, a second program that works both with FHA and conventional. It's not better than FHA or conventional. It's really what your situation was that meets those underlying loans. And MSHDA really is the best program out there for helping with down payment assistance. So from MSHDA's standpoint, Darren, what are your three takeaways for our team?
So I'd just like to reiterate that MSHDA is not just for first-time home buyers. It can be for repeat home buyers or current home buyers. If you have a unique situation where you've owned a home in the past, you may still qualify as a first-time home buyer if that home ownership happened over 3 years ago. So don't adverse yourself. Make sure you take the time to ask the questions and talk to a loan officer. And also be aware that using this program, our down payment assistance program, can actually get you into a home less than you're going to get into your next apartment if you're considering first month's, last month's, and security deposit. So home ownership might be closer than you think it is using all of these tools and resources. Make sure you ask those questions and educate yourself, which moves me to my third point. Home buyer education is required for down payment assistance. If this is a program that you're interested in, please investigate and utilize the home buyer education tools early. A lot of them are free. They're going to give you more insight into the process, answer a lot of your questions, and make you a more educated consumer, which is going to give you the opportunity to take advantage of all the resources that are out there.
Yeah, and Darren, you said it earlier in the call about preparing people to become successful homeowners. And a successful homeowner is one that has longevity in their mortgage and making their payments on time and doing all the things, not just getting into the home as you continue into that. I meant to ask, is there any, Darren or Matt, is there any limitation on house or condo or property type for MSHDA?
No, not necessarily, but there is a maximum purchase price that you need to be aware of, which is $500. So while we don't necessarily have a property Where you can't buy, it is 224,500 is the maximum purchase price.
224,500, and I can get a condo. So if I so choose in those.
Correct, yeah.
Awesome. All right.
As long as it's single family owner occupied, you can do single stick built, manufactured, modular condos. Those are all available to your membership.
Wonderful. All right. Well, listen, we've come to the bottom of the hour and I want to be respectful of everyone's time today. So if you have questions, general questions about the technology or the format of our seminar, please email us at mortgageseminars@michiganfirst.com. If you have any questions for Matt, all of his information is right on the bottom. He's also on our website along with 30 plus other loan officers that are there that you can reach out to. And believe it or not, we are available from a mortgage company standpoint, 24 hours a day, 7 days a week, 365 days a year at 800-664-3828. So if at 2 a.m. you want to talk MSHDA, please just reach out and we'll make sure to gather your information. And then from MSHDA standpoint, and of course, Darren, his contact information is available both at michigan.gov and MSHDA.com. So if you have any questions about today's call, please refer to the information on today's page or reach out directly to us at Michigan First Mortgage. So thank you all for joining today. Matt, Darren, thank you so much for joining us. Have a great day and happy St. Patrick's Day to you all.
Thank you. Bye-bye now.
Bye-bye.
I know.